something really quite innovative and different with hotel management. So please give a very warm welcome to Abhinav Sinha, who is Global Chief Operating Officer for OYO Hotels. Abhinav, welcome. Do take a seat.
Thank you.
I've been doing a little bit of reading about OYO, and it is a really fascinating company, from its beginnings to its massive expansion and its plans for the future. But I'm imagining quite a few people here will not know so much about the OYO story, so I think we need to start at the beginning. Just explain the origins of the company, the concept behind it, and how it has developed.
Absolutely. Let me start by first thanking everyone for having me here. It's an absolute privilege. OYO is a 5.5-year-old company. We started in India late 2013. And over the last 6 years, under 6 years, we now have more than 500,000 rooms, which are either franchised or leased as part of the OYO family. We are present in more than 10 countries across the globe, across more than 500 cities.
Where are you biggest? Which countries are your core?
China is the #1 market for OYO today. India continues to be our core market. That's where we started, but China has now outdone India. We are very excited about that. So China is almost 1.8 times the size of our core India market.
Wow. So how many rooms in China? Because we're going to have another session about the Chinese market, actually attracting visitors into this region from China, but China itself as a market for hotel management. Just tell me how many rooms you have and how many you're going to get to, do you think?
We have, as we speak, about 320,000 rooms in China.
Wow.
We are adding more than 40,000 a month in China, and it goes to it goes back to the point of how our business model is technology enabled, which allows us to move at this pace and really go after the economy and mid-economy segment. So that's what we are doing in China. And going back to a little bit more about OYO, we really, the mission of the company is to create quality living spaces and fundamentally improve the equilibrium between location, quality, and price. So we really believe through our efforts, through our ability to upgrade the infrastructure, through our ability to use technology to improve the fulfillment in the economy and mid-economy segment, we end up improving the balance between these three key parameters for the customers, which are price, quality, and location.
But are you primarily, in your mindset, a technology company, a sort of Airbnb style company?
Yeah. We started off as a technology company, so we are very proud to have a DNA of a technology company like Airbnb. Over the last 6 years, what we have built is a company which sits at the intersection of technology, real estate, and hospitality. So now we understand these two other large industries also very well. So we are a classic, so to say, a large offline to online company today.
Right. So let's go through each of them. In terms of the beginnings, the technology, you're all of you founders of it are tech-savvy people. What did you see that technology could give you when you moved into the hotel and hospitality sector?
The most fascinating insight for us was the following. If you look at the overall hotel inventory globally, 90% plus of this inventory is tied up in assets which are 100 rooms or smaller in size.
Right.
A lot of innovation keeps happening in the assets which are 200, 250 rooms or larger.
Absolutely, because a lot of this conference is about the big hotels. Whether they're mid-market or luxury end, they're big.
They're big.
And you're much more interested in the small operations.
The small hotels. Now, why the small? Years and years, why were the small hotels, the small assets, neglected, and most of the big box retailers, the chains, went to the larger assets? It's because the fundamental business model works better in the larger assets. And how do you make that business model work more effectively, even in the smaller assets? That needs disruption using technology at each and every part of the business value chain.
So you're appealing to the guy, let's create a case study. You've got a guy who's running a guest house in India. He maybe has 30 rooms. He's maybe not very successful. He's really struggling to build up his customer base, and you come along and you say, we can work with you, and because of our huge online presence, because of our distribution operation, and because of our new understanding of hotel management, we can hook up with you and transform your business. How do you go about doing that?
That's true. That's how we go about it. In more detail, it can either be for franchising contract, and we also lease. So about 20% of our assets we lease and operate, which has enabled us to build a lot of this technology to a first principle understanding of how this works. We come in, if you look at the independent hotel owner, they typically are not a hotelier. They are an asset owner, they are an investor, and they are now basically stuck with this asset because no other large retailer would come and work with them, no other brand would come and work with them. They do not know how to do pricing and revenue management. They do not know how to unlock multiple channels for distribution. They do not know how to invest capex for higher returns and increasing RevPAR. They do not have the right technology stack across their hotel to deliver great service. They do not know how to do CRM. They do not have access to capital for even think about repair and maintenance. There is no scientific way for them to go about repair and maintenance. 90% of these assets that we are talking about would basically be doing breakdown maintenance, which basically seems so obvious in this room. It's like a throwback 30 years back, but a large part of the industry that we are a part of still operates in that way. So that is where we come in. We bring in our own integrated capabilities driven by technology end to end, right from starting with what capex to invest to upgrade the infrastructure.
So you will literally send a team in to renovate the hotel?
That's right. We do a detailed audit, which is again enabled by an app. It throws up options for designs based on our templates that exist. The data science team decides which template to go after based on the market, based on the customer profile. It optimizes the capital invested based on the return that I will get through the increase in RevPAR of the hotel. So it's a very scientific, data-driven investment.
I know you're a guy who used to work for Boston Consulting, and you love your science and your data and your tech savviness, and I get all of that, but just the way this works on the ground, the most fundamental question of all is, you're saying to this guy, the owner of an asset that isn't really working very well, we can turn your business around, we can turn your asset around. What kind of a chunk, what kind of a cut of potential profits are you demanding?
The franchising model works on a share of the top line. So we come in as end-to-end partners where we make their life easy and help them make more money. So if you think about it, Stephen, this is perhaps the most amazing proposition you can make to a small-time businessman. I'll help you make more money and I'll help you save your time, right? And that is how it starts. And you take a cut of the top line, which typically is north of 25%.
North of 25%.
That's right.
That's pretty substantial.
Yeah.
And is that, you're in all these different markets now. Interestingly, you're huge in some of the biggest emerging economies in the world, not just China and India, but I notice Indonesia as well. That's a huge market.
That's right.
So do you have the same sort of deal across all of these different markets, or I'm guessing that India and China might be quite different?
You're right, they are very different. In fact, within India, every market is different. Within China, you go to the tier 4 and tier 5 markets, they are very different. So the deals are all customed to the market that you are talking about, the type of asset, the problems that the asset is facing, and at the end of the day, they are tied to the ability to create value in the asset.
Right. Now, we had a very interesting talk earlier about franchising, about the importance of consistency of branding across the brand's portfolio, whether it's being managed, franchised, whatever its situation, it needs to be consistent. So if I'm visiting an OYO hotel in an urban environment in China, a rural environment in China, then in India, then in Indonesia, am I finding the same product and a real level of consistency?
Great question. So the way we think about this has two elements to it. One is your entire online experience of coming online, finding the hotel, discovering the hotel, making the booking, and thereafter arriving at the hotel. And then second aspect is your physical experience once you walk in the door inside the hotel. We have a very powerful distribution system. Our app powers about 80% of our distribution in India and a significant portion in some of the other markets that we operate in. So it allows us very, very high levels of consistency in the first part of experience.
But yeah, I understood. Are you using other online travel? Are you using?
We do. We do use, of course, as I will tell you, we are everywhere.
You're everywhere. But okay, so I can see that's relatively easy to obviously the app can deliver a consistency of experience in reservation and booking and information, all that stuff.
Correct.
But then
on the second part, we also have a multi-brand approach. We talk about this multi-brand approach is a two-way structure built on the type of assets. You have the hotels, you have vacation rentals, and then you have our OYO Life brand, which is for the long stays, which is for apartments. And then it is based on the price points. We start off with OYO Hotels, then there is a brand we call Capital O, then there is a brand we call Collection O, and at the top of it we have OYO Townhouse. And basically there are different formats of standardization across all of these. The highest levels of standardization is the Townhouse, where your investment is also the highest. And the standardization elements, we basically use, again, a data-driven methodology to basically figure out how do you drive maximum standardization in the minds of the customer, which leads to maximum repeat, right? And optimize it using capital. So for us, standardization, as you mentioned, is linked to the ability to drive repeat customers.
All right, and you're saying you do that a lot with data and computer power, but in the end, this is about human beings as well.
That's right.
So you need teams. I don't quite know how you do this, but because you've got such a spread of small hotels and guest houses and residences in your portfolio, how do you keep tabs on their capacity to deliver the standards you expect? What kind of systems do you have in place on the ground involving real people to check up on your portfolio?
It is such a smart question. Let me give you a very real example. We have about 1,400 what we call OYO captains. These are people on bikes or in cars, and these are mobile auditors on the ground. They move around with their OYO app. It's called the Krypton app. Our captains live in Krypton. And every day, it's like the Uber driver. They get up in the morning, they fire up the app. The app tells them exactly where to go and what to do, what to audit. The audits are then based on a lot of data, which streams in, basis feedback that customers like you are providing when they check out, which is at a room level. The most fascinating part, if they go and audit a hotel, for the next 1 week, based on the feedback I receive in the rooms that they audit, their audit gets a score. So you're also able to see who's a good auditor.
You're auditing your auditors.
You are auditing your auditors. And it's a super efficient system which you can't basically run. To your point, you cannot run this at the scale and the speed that you want without technology.
Yeah, no, it's absolutely fascinating. And the big boys, as we call them, maybe you could learn a thing or two from the way you're doing things, which brings us to the point, the overarching concept. What we wanted to put you on stage and tell us your story, because there is a question of whether the model you are pursuing, which was born in the emerging economies, but which you clearly want to move across the world into the developed hotel and hospitality economies as well. How disruptive do you believe your approach can be to the status quo?
It can be really, really disruptive. And here is our understanding of the developed markets. Look at the UK and look at the US. I will talk about these two markets. We are already present in the UK, and I will share you some data about the US, which is all public data. If you look at the independent hotels, which are not part of any large franchising operations already, that is the fragmentation that we are talking about. That number in India and China was north of 96, 97%. In the UK, it is north of 70%.
Is it still?
Yeah. 70%, and that's not bad at all, right? And it's a very mature market.
But you want to get a real chunk of that 70%.
Yes. So it's a very large market. The market still has a lot of fragmentation. From the supply side, the owners, the asset owners of this 70% fragmented assets face exactly the same set of problems that an asset owner in a developing, emerging economy of China or India would face. And that is why we are it's still early days for us everywhere. But we are also seeing significant traction in the UK.
So tell us, okay, because it's interesting, and then we can talk about this region and how you would see your development going in this region. But in the UK, a developed economy with obviously a very well-established hotel and hospitality sector, I don't know how many years you've been in the UK, how many, 2 or 3? Or
less than 1.
Less than 1. So what kind of reaction are you getting? How's it going?
It's going really well. In the UK, we are adding about 100 hotels a month now.
Wow.
So it's a pretty fascinating.
And what's the average size of the hotel you're working with?
About 30 rooms.
Yeah, so pretty small.
So you were right.
Yeah, interesting.
Yeah.
And you can really see that taking off and becoming a big part of your portfolio in a developed economy like the UK.
Yes, absolutely. And fascinatingly, using the same set of capabilities, core capabilities, driven by technology that have emerged for us from the countries that we have operated in so far. Of course, they need a layer of customization on top to make it as efficient as we would like.
So let's bring it to this region then, because we just had the fascinating discussion of all these players in the mid-market, all of whom said that their top 3 or ambitions and opportunities that they see right now. I mean, maybe they were saying it partly because they're at AHIC, but they were talking about Ras Al Khaimah, they were talking about Saudi Arabia, various places they see in this region offer huge potential. So with your concept, which is fascinating to me, it's got a lot that's quite innovative about it. How do you see the potential of this Mideast region and in particular UAE?
We see a lot of potential. We are already present in the Emirates as well as in Saudi Arabia, in 7 cities in Saudi Arabia now. We see a lot of potential. There are significant number of assets which are independent. The asset owners who are hoteliers as well, doubling down as hoteliers, face a lot of these challenges, starting from the technology that they have to use at their assets, to the challenges of pricing and revenue management, to the challenges of, as an individual owner, not having the wherewithal to manage multiple distribution channels. But more importantly, we have also seen that the ability to use capital in a very smart way to construct something which has the highest return on your investment, that is one of the most interesting ways where we are adding a lot of value in this region already.
To put it bluntly, in the end, for the consumer, it comes down to the equation of cost versus quality. I mean, do you believe that you can undercut the big boys, the brands that have been on this stage and that we all know so very well? You can undercut them, offer your own differentiated brand, but offering a quality at a better price than they're doing.
We definitely believe that the market is so large that we need not even worry about whether we have to undercut them. But we really believe that we can improve the equilibrium, what I started with. We can improve the equilibrium for the customers between location, price, and quality, which is basically at any given location, using our business model, we can provide similar quality with lower price.
You can act very fast because you're not actually building hotels, you're turning around assets which perhaps have been underperforming. How far can you go? I mean, if you say you've got roughly 500,000 rooms now, what's the limit to your ambition, your vision for growth?
We have talked about it publicly earlier, so I would mention this, and we really aspire by 2023 to build the largest hotel chain that humanity has ever seen.
I love it when we come out with a really big ambition. Okay, so
yeah. So we are really committed to that. We believe it will make life easier for a lot of customers across the globe with better quality living spaces at the right prices in more cities than what we are present in. And it will also help us take our model to a lot of asset owners, delivering higher yield on their assets and making their life easier in the process with less investment of their time.
Right. At what point are you going to be bought out by Airbnb?
Airbnb is a great partner. We
I should
see-
say Airbnb now have a stake. They
That's
have
right.
an equity stake in your company, right?
That's right. That's
What
right.
percentage right now?
It's a very small percent.
How much?
It has not been discussed publicly, so can't talk about it, but it's a small percent.
Well, we're amongst friends, so feel free. But you're going to, I mean, you're going to end up a very rich man, but you're going to lose control of your business because that's the way these things work.
Well, I think the key is to have control and to have a very clear vision. I think what we have seen while building a company, control is always with the person who has the vision and who has the execution all under control. So our management team is very focused on having a clear vision and having clear control on the execution. And both of these are very difficult to do in a dynamic changing environment.
It's fascinating stuff. We like to bring innovative ideas to AHIC, and I think, Abhinav, you've succeeded in delivering one for us. It's a really interesting model for the future. Thanks so much. Please
Thank
give
you.
Abhinav Sinha a very warm